This is the FlipNerd.com Expert Real Estate Investing Show, the show for real estate investors, whether you're a veteran or brand new. I'm your host, Mike Hambright, and each week I bring you a new expert guest that will share their knowledge and lessons with you. If you're excited about real estate investing, believe in personal responsibility, and taking control of your life and financial destiny, you're in the right place. Hey, this is episode number 308, and my guest today is Eddie Speed. Eddie is a note expert and has been involved in over 30,000 note deals and over 5,000 real estate deals. Really, Eddie is an industry legend. Now, when I say the word note, a lot of real estate investors tune out because their first thought is, well, I'm not in the note business. But Eddie is going to join us today. What he's going to talk about is why every real estate investor actually is in the note business. And you're very likely passing on deals or selling deals for far less than you could if you really understood the note business just a little bit. So it's really going to be a powerful episode. So in part one of the show, Eddie is going to tell us more about the note industry. He's going to share the size and scope and really help us understand the opportunity that you're most likely missing out on. Quite frankly, I've missed out on lots of deals, probably more than 100 deals that I could have sold another way, but just didn't really realize the opportunity. And part two, we're going to shift gears and we're going to jump into the action mode segment of our show. And Eddie's going to tell us more about actually how to take advantage of these incredible opportunities to make more money. Really, it's on lower priced homes, lower price band homes that you're likely missing out on right now. So if you're a pro or elite level member, you don't want to miss part two of the show. Let's get started. Please help me welcome Eddie Speed. Eddie, welcome to the show, my friend.
Thank you. So glad to be here.
Yeah, great to see you. And of course, we saw each other just last month at a mastermind we're in. So it's always interesting when I interview people that are actually not far from me here locally in the Dallas area. We're just in different parts of the suburbs. But I think we either have to get on a plane or get on Skype to see each other, though. What's that all about?
You know, it's really funny. You and I see each other at a lot of big events and these masterminds and stuff, and yet you're right. We don't spend enough time breaking bread locally, and we should.
Yeah, absolutely. Well, I'm excited to have you here, and I want you to maybe take a couple minutes and maybe tell the listeners today a little bit about your background. And you've got a really rich history, and I'm excited to talk about what we're going to talk about today because I think it's going to. People have kind of segmented that. Hey, there's real estate investing, there's single family, there's multifamily. There are these big silos. There's notes, but hopefully today I think you're going to do a good job of convincing people that the notes is not its own silo. It's right up there with it's connected to everything else. So anyway, maybe you could take a couple minutes and just tell us a little bit about Eddie Speed.
Well, I was a lucky guy, and the reason I was lucky is when I was 20 years old. I was actually living in Mississippi at the time, and I was a horse inspector for the state of Mississippi. Seriously. Yeah. And so I met who now, Martha, my wife, that you know well, and we've been married for 34 years, but 35 here in a month or so. But I met her and her father was one of the pioneers in the whole United States of buying owner finance notes. So I was introduced into it in 1980. Interest rates were 20%. So people were creating owner finance notes because they could write the interest rates on those notes and make them affordable versus conventional mortgages were such a high interest rate, the payment shock was out of sight. Yep. So I just kind of fumbled into this business. I wasn't like you and very strategically, there's an opportunity here. I was just, a dumb cowboy kind of thing. And that was in 1980. So Martha and I married in 82, and we moved to Dallas and started buying notes. And then obviously we started by the latter part of the 80s, the market fell apart, the old RTC days, and the banks were going broke. And then we started buying distressed notes. So we bought paying notes and non-paying notes. And so, pretty much that whole life cycle, we've done both sides of the business. There were eras we didn't buy a lot of defaulted notes, and probably the early 2000s, there just wasn't a lot for sale. But we've always bought paying notes. And then
performing, said another way, performing notes.
Here's some history. You probably don't even know this. Half of the seller finance notes I bought have been on dirt. So I bought, me from kind of like the real estate investors that had a model and create owner finance notes over and over and over, and we would buy those notes, right, on houses.
Yep.
But if you look at all this country land and the guy selling land tracts, and he offers owner financing, well, now what does he do with his paper, right? So I've bought a lot of paper like that. So predominantly working class real estate, not always. So it's either been working class real estate or land. In my life, I bought notes on everything.
Yeah. Yeah. Why don't you kind of just take a couple minutes and demystify? Because people hear, I think sometimes the word note causes confusion. It's just a mortgage, right? But I mean,
everybody in our audience is in the note business. Everybody in our audience right now is in the note business because they have a dollar bill in their pocket, and they've all written a check, and they've all received a check. Both of those are notes.
Yeah.
Okay. So we buy installment notes, right? Meaning that it has an amount owed plus interest over time with payments. And then it's secured by real estate. Okay. So the note is the promise to pay. And then in Texas, it's called a deed of trust. In Oklahoma, it's called a mortgage. That's what gives the note the security of being secured by real estate.
Right.
In fact, an attorney calls it a security agreement. Okay. So when we say we buy notes, we are buying the right to receive payments on the property, but it's secured by the property itself.
Right.
And here's the other caveat. We buy notes at a discount. Okay. So everybody is familiar with this because everybody has heard of basically the check cashing service business. In other words, you go to a check cashing service, you got a $1,000 check, they give you $900, and then they get your check. Well, when they deposit your check in the bank, the one that you gave them, how much do they get? They get the full $1,000.
Right.
Well, theoretically, people say it's a fee, and the truth of the matter is it's not a fee. Mike, they could give you $500 for a $1,000 check, and it'd be the same thing.
Yeah.
So we buy notes at a discount, but what we pay for the note has nothing to do with what the borrower owes.
Right. Or maybe nothing to do with the value of the home either, right? Because it's based off of some discount to the revenue stream that's expected from that property, right? That's
correct. So if we buy a note that's paying every month, when we buy the note at a discount, let's just use a nice round number, $100,000 note paying 10% interest. And people say, well, that's ridiculous. Well, some owner finance notes are 10%, so that's not possible.
Right.
So if I bought that note at a 25% discount, then I'm going to earn more than the 10% interest on the note itself. And that takes my return up into the, hypothetically 15% return.
Right.
Because I did not pay the full amount owed.
Right. Yeah. And it's no different than, I think there's a lot more people, like everyday people, that invest in stocks versus bonds that are really understanding a bond trader. But a lot of your opportunity has to do with how much you discount that note for, right?
That is correct. Yeah. And obviously non-performing notes are discounted for a different reason because you have to assume catastrophically that if you're buying that note, you're going to end up with the property. You'd hope you could save them and keep them in the house.
Yep.
Right? But if that doesn't work out, and by the way, about half the defaulted notes we buy, they've already vacated the house. So the odds doesn't look very high there, right?
Right.
So then you're just buying the note at a price that you can kind of live with the price if you end up owning the house. Think in terms of a pawn shop, kind of the same concept.
Yeah. I don't know if the pawn shop reference gives it any positive light though.
Well, it's funny, but people have seen the shows on TV with the pawn shops,
right? And
so they can kind of equate to, okay, he figures out what the collateral's worth, and then he offers a percentage of that,
right?
So I always just kind of tell that we are kind of a pawn shop for real estate, but we're a high class pawn shop. How about that?
Yeah. I know you're very high class, Eddie. So the interesting thing, we've had this discussion, and Eddie and I have been talking about this for a while now because he is working on some things to try to help investors understand that, the traditional real estate investor that's single family, let's say, that's wholesaling and rehabbing, all these things, never really thinks about notes. But you think of it in the context of the opportunity to seller finance, right? And so it could be that seller financing, which is in its essence creating a note, right, is a very viable exit strategy, particularly for lower end, kind of you call the lower price band, but 80,000, sub 80,000, sub 100,000 type levels. You want to talk a little bit about that, Eddie? It's time for a quick announcement. We'll be back to the show in less than 30 seconds. PassiveRental.com is your source for turnkey, done-for-you rental properties. If you'd like to be an investor and not a landlord, please visit PassiveRental.com to learn how to purchase cash-flowing, professionally managed rental properties in the hottest rental markets across the country. We can also help connect you with financing for your next property. Invest the easy way today and get started by visiting PassiveRental.com. Type levels. You want to talk a little bit about that, Eddie?
I think that I think that is by far the most undervalued market in residential real estate today.
Right.
And the reason that's true is the lack of financing. So if you look back at real estate, what drives the sale of single family houses is either the affordability of financing or the availability of financing.
Mm-hmm.
Right? Now, in this last era that we went through from 2008 to where we are today, what happened in the market is the stock market people got scared, what I call stock market refugees, and they started absorbing real estate. And the fact that in 2011, 50% of the people that applied for a mortgage were turned down, amazingly did not affect the flow of people buying real estate. And that's only because of stock market refugees. So, but what happened is the government regulation, and our friends in Washington, and they designed a plan to protect the little guy. And I'm not defending subprime lending. Subprime lending had some big flaws in it.
Sure.
So I'm not defending that or acting like that was ridiculous, because it definitely wasn't. But what happened is they came out with obviously the famous legislation called Dodd-Frank.
Right.
And what happened as a result of Dodd-Frank is it walled off the consumer. And there's articles that's been written about it. In fact, I've been conversed with some of the people that have written some of the articles. I know Darren at Realty Track wrote an article about it, and he and I discussed that quite a bit before it went out. Because I've been a big proponent in saying the problem with Dodd-Frank is the banks can't afford to make a small mortgage.
Right.
They're limited in fees, and just the math doesn't work. So if you're buying, and I know that people living in LA or people living in, Metro Washington, D.C., they can't wrap their mind around this. But there's at least 20 states that close to 40 to 50% of all the houses in those states are sub $125,000 houses. What the industry calls low price band.
Right.
And when you see that and you realize that a stat came out just not very long ago, 60% of all low price band houses sell for cash. 60%.
Yep.
And when you see that number, what it tells you is that's a wholesale market. That's not a retail market. And so people say, real estate investors says, well, I know notes are cool, and maybe, if you're Mike Hambright and you're a really seasoned investor guy, maybe you can figure it out. But I'm just a little guy, and I don't know if I can figure it out. Here's what I believe. This is a water bottle, okay? What's it cost? What's it worth? Well, if you and I are at DFW Airport, after we get through the TSA security.
After we dump out our perfectly good bottle of water on the outside of the...
You throw that bottle out, now you go in there and pay $3 for it, and you go to Costco's and it costs you 20 cents.
Right.
So how that water is merchandised has all to do with its value. So if you're looking at a house that's rental value far exceeds what its cash comps in MLS says it's worth, then maybe the cash comps are a wholesale price, and maybe you could sell it on a retail price based on the affordability of the payment to a tenant living in it as a turnkey property, like you like a lot, and I do too. And I'll have a seller financing technique that's pretty cool for that down the road. And then, or you sell it to a consumer. And the reality is when you look at a real estate investor and you realize that real estate investors are probably leaving a crazy amount of money on the table.
Yeah, we tend to, we talked about this a little bit before we started recording today, is that we historically we're viewing the MLS as the tell-all for what the value of the house is, and those houses are typically houses. There's some cash sales on there, but typically it's houses that got financing, went through an appraisal process, and kind of were evaluated on the retail market, the traditional route, right? But if you're looking at that, we always kind of struggle with low price point neighborhoods because there generally aren't a lot of good comps, and you kind of know in the back of your mind that most of the sales are happening off the market, off the MLS market, that is. And they're probably selling for, if they're seller finance, they're going to actually get more money for them. And that's kind of the opportunity that a lot of investors might be missing out on, right?
Well, and think in terms of this. What about the consumer? What about the guy that now can't have home ownership?
Right.
Because he's walled off.
Right.
And that's a very legitimate issue and we've been to Washington, we've been involved in this legislation, Seller Finance Coalition, and we're in the process of, we believe, getting this law changed where you can sell 24 houses a year and not have to be treated like Bank America.
Right.
And that's pretty cool.
Yeah.
But the reality is the argument we've made with both sides of the aisle in DC is this consumer, he didn't have cash. I mean, the house may be cheap at 40 grand, but if he doesn't have 40 grand, it's not cheap to him.
Right.
And he's not able to buy a house because he can't go to the bank anymore and get a $40,000 mortgage.
Right. But a traditional investor, a lot of the people that we know, are more than willing to write a note on that house and charge what the market sees as maybe an exorbitant rate, but it's still a far better deal than renting an apartment.
It's not an exorbitant rate.
I agree with you, but we've been conditioned to think that, well, rates are, we're conditioned to think that fair is what the 30-year rate is through a large bank, right?
Here's the bottom line. Their principal and interest payment would be cheaper than them paying rent.
Right.
So if a guy can buy a house and pay back a loan in 20 years on a mortgage payment that's cheaper than he can afford to go rent the house, and he owns the house at the end of 20 years, that's there's nothing exorbitant about that.
Right. And for those that aren't watching the video, I used air quotes when I said exorbitant. So those that are listening didn't see that. But
exactly.
But yeah, that's my thing is some people see that. That's supposedly why Dodd-Frank, a lot of that happened, right? Is these investors are maybe taking advantage of people, right?
You can't defend subprime lending. Okay, they made loans to people that should have never gotten a loan. Okay, and they did charge a lot of junk fees, and they did stuff. You can't defend.
Right.
You can't say, well, the guys in Washington were wrong. Subprime lending was totally great. Here's the problem. And when I got in the business, I started in 1980. Through the 70s and the 80s and part of the 90s, a lot of inexpensive houses were finance companies. The banks had a certain size loan, certain size deal, and the finance companies would go out and make the guy a loan. And yet it would be a little higher interest rate, but they could get a mortgage on their house and they could own it.
Right. Okay.
Now when they changed the laws and they limited the fees, the finance companies can't make an economic model work. So instead, this house under 100,000 has become what I believe is a subset of real estate. It's not, you can't compare it to normal MLS houses. If you're looking at a house in Dallas, it's $300,000, and you look at MLS, that's probably what it's worth.
Right.
If you look at a house that rents for $900 a month, and on MLS the comps say it's worth $45,000, surely you can't believe that the house is only worth $45,000 with a rental value of $900 a month.
Absolutely.
That's my point.
Yeah.
That is why every real estate investor needs to know something about notes.
Yep. Well, I know you're about to tell us that and take an extra segment here in just a second. So before we get into that, Eddie, I've got a question that we got on Facebook that I wanted to ask you about. Okay. And before we jump into the next part of the show here's the question. Is it easier to invest in notes if you have prior real estate investing experience? Or does it screw your head up?
Fair. Your learning curve would be less.
Yeah.
It would be easy if I took you to a deep dive in the business, Mike. And I know you're a very sophisticated guy, but there's obviously things I could teach you about notes.
Oh, I'm sure there is. I have very little experience.
Advantage over somebody that's never done it.
Right.
But let me say this: Eddie Speed started at 20 years old, and I thought alone was being by myself. So you can learn it with no prior knowledge. It's just going to be a little longer runway to get going.
Okay.
Yeah.
Well, hey, let's go ahead and jump into the taking action segment of the show here, Eddie. Thanks for joining us up to this point in the show. The second half of our show is restricted to only Flip Nerd Pro and Elite members, and only accessible on flipnerd.com. If you're not a Pro or Elite member yet, you can upgrade your account in about 1 minute by visiting flipnerd.com/upgrade. Depending on membership level, you'll get access to off-market properties real time, including real-time email and text alerts for new properties listed in your market. You'll get access to hundreds of full-length expert interviews, and Elite members get access to the Flip Nerd Lab, which includes detailed masterclass trainings, 2 live webinars a month where you can interact with leaders in the industry, and access to our Elite Mastermind group, where you can interact with hundreds of the top real estate investors in America. Build relationships with those that are actually operating successful real estate investing businesses. By visiting flipnerd.com/upgrade, you'll learn much more about our membership options. And once you've upgraded your membership, come on back and listen to the rest of this show. Wish you could watch or listen to more flipnerd.com shows? You can. As a premium member, you can get access to the full length of hundreds of past shows at flipnerd.com/shows. Or hear us on iTunes, Stitcher Radio, or Google Play. While you're there, please subscribe so you don't miss another episode. And if you like what you hear, we'd really love a positive review. It's the ultimate high five for us. Show us some love by subscribing and giving us a great review today.